Good afternoon, everyone. It is Wednesday, July 21st, 2021. It's 5:13 p.m. and the market has officially transitioned to the next day. I'm going to just highlight what happened today. It's been a very bullish day, and I actually believe this is the start of midweek reversal. Now, going on the daily chart, let me just clean my charts up real quick. Delete all of the Fibonacci lines and the trend lines. All right. Okay. So we have some clean charts set up. So we can see price yesterday, it went and it closed below 150. That was my short entry. I believe that the bias was going to shift and change after it had done close below 150. And technically, it should have definitely kept on going down. It did drive down about 140 pips. And what happened the next day afterwards was a very infamous move called the bear trap. So what the market did was it got sellers in the market once the previous day's lows were broken, and then it drove it down a little further, and this was all straight profit taking. This was profit taking for people that were selling off of this uptrend right here on the daily. As you guys can see, it's profit taking. So what I expect to happen next is that price went and it closed above the 150, indicating that it's going to more than likely be bullish again. And my original bias, all the way back from my first video of this series called GBP JPY tracking number 1, I had indicated that I am bullish. My long-term bias is bullish. We can see on the weekly, on the monthly, even in the light on the academy students can see the 2-year bias. And yeah, right now it looks like it found support, and that's exactly what I was shorting into. So I got in the market a little late. I took my loss for the day. It wasn't much. I lost a little bit of money. I traded a standard, tried to take it down. I was going for $1,000. I lost 300. It happens. It's part of the game. But now I'm going to seek opportunity towards the upside. I do suspect price to continue going on up to 153, which is it's a key level on the 4-hour, and ultimately price to go up to 155. I'm still looking at that. 155 is the weekly resistance level, and what had happened, and to explain why price went into the bear trap and continued the opposite direction, is right here. Let me zoom out actually. This is the bottom of a weekly key level. So if you look at the wick all the way back on March 21st, we can see the bottom of this range before it took off and made higher lows and higher highs was actually at 148.5. So the low would be about 148 of this exact entire range. Now, of course, price did go bearish, and it technically should have continued down, but the overall direction of this is going up. So at any moment, those bears can be invalidated, and they could be in the wrong side of the trade because the majority of the market is going to continue to take it up. So what had happened to me was I got caught in the end of that move, and it went exactly down to the T, tapped the lower end of the demand zone, which was actually quite a large demand zone. That's why I had a stop loss there. And I'm not making a 200 pip stop, so I would I'll try to aim to drive it down. Unfortunately, it did tap the demand zone, drive back up. This is the weekly candle. The week is not over yet, and it's once again above 150. So because we did not have the weekly close below 150, the bias technically could still go on back up to 153 and play within this range. So going down to the daily, we can see that price did find support. There's a candle pattern that was formed. I mean, this is a really there's about 40 minutes left in the market. Actually, it's 5:19, so it's not officially over yet. Give or take about another 40 minutes. But once this bar does close on the daily, then we will have confirmation of a pattern right here. You guys see that? It's a very bullish pattern, and I do suspect this bullish pattern to power and drive the rest of the remainder of the trend towards 155. And it's perfect because the pattern happened right on 150. So sometimes the market can breach the psychological areas. Sometimes it could stop you out. Just make sure you're on the right side when it does make the big moves. And that's exactly what I'm setting myself up for. So if you look at the 4 hour, we can see I think the market is actually not moving. It's very slow right now. Okay, well, I'm going to keep going with the video either way. If you look at the 4 hour, you can see that price still has some way to go before we reach one of our 4 hour reference zones. But I do suspect price to continue to go up to 153 flat. So that would be around 183 pips from right now. And that's going to require some momentum. We have to build the momentum. So let's wait for the Asia session to go underway. I mean, the previous two 4 hour bars are very bullish, but there was low volume on it. So this is telling me that this breakout from this 149 range is not strong enough because there's not enough volume. And I do suspect price to pull back at some point during Asia. It's either going to pull back and then take on off upwards, or it's going to just go straight up, hit that 152 area, and have a nice rejection from there. And at that point, I'll be looking for my entries to take on to the upside. But we have to wait for the reaction. Let's get my horizontal tool out, see if I can plot any other areas. So we know that this is a key area right here where a price could potentially run into. There's another key area right here. You guys see that, right? So let's just say price runs into this and closes and breaks above here on the 4 hour. Then we have another potential 70 to 80 pip run before another potential resistance area is hit. So before price can get up to, as we can see on this chart, the 155 zone, there are a couple areas of resistance ahead, and price could react, pretty volatile to these areas. So just be wary. Now I want to go into an even smaller time frame. Let's go to the 30-minute so we can see price action in play. For the past few hours, we can see that prices created a range at the high of the day. And so we're waiting for this range to be broken. And if it is broken, we have to look for the next area. I'm not saying it will go back down and retest 150, but there is a potential to go back down and retest 150. So don't be surprised to see a bearish move during Asia session that is going to actually drive price down to 150. But me, I'm not really interested in that type of trade setup, because that is quite a few, that's quite a bit of a weight. And I'm not relying on a catalyst to drive price down there. So, I mean, if I were to set up a limit order based off of the 30-minute, it would be around the 150 zone. But let's get a little bit more accurate. Let's get to the hourly. Let's draw a fib. Price had just broken out. We can see that. Lots of sellers right there. Got induced and he got trapped up. Pulled back. That was the pullback. Takeoff. So we're going to do a Fibonacci from there to the most recent swing high. And then we can see a good area to buy would be around the 153 zone, because this is right above the 161.8. So if I were to buy and have a conservative entry, let me just set this up for you guys. If I were to buy and have a conservative entry and wanted to make sure that it did actually trigger my trade, I would put it right there, about 80, 90 pips away. It's about being patient. And where would I take this? TP1 would be at 151.5. Actually, I'll bring it to 151. TP2 would be the extension around 152. And our TP3 would be further out towards 155. But it's going to take some time before TP3 is actually hit. So let's focus on the intraday, the intra-week, not intraday, the intra-week price action. And I will follow up with you guys at the end of the London session tomorrow or during the US session. Oh, one more thing before I go. Let me just make sure I place my stop losses for you all to see. This is quite a big stop loss, but this is my limit order. This is just an example. So about 10 pips below the 0.786, so 149.5. So all right. And that will give us, not too bad, 82 pip stop. And first take profit, like I said, will be 151. I'm going to aim for 151.5, because I do believe that these are going to be, for the people entering short right now, that could potentially short it to my buy. This is where their stops are going to be, and I'm sure that because they're unaware of the bias change, they're going to continue to try to drive the price even further down. But because the fundamental bias is back to the long side, what I'm assuming is that they're going to drive price down, trigger my buy limit order, along with many others that are aware in the bigger institutions. And with enough price force and pressure, it should be able to drive price back to the upside and at least target these people's stops. This person's stop. So I'll follow up with you guys in a few hours. And yeah, that's it.